Hello, this is 𝐦𝐚𝐫𝐤 here, and in today's video I would like to discuss about the reasons why this market, particularly the Indian stock market, Nifty, and also say USA stock market keeps on rising. So we'll discuss sector wise, and then we'll conclude whether this rise is really backed by the fundamentals reasons or it is just a bubble. So if you like this video, you please put a like and please subscribe to my channel and share it with your friends. So if you must have seen in last 1 month at least actually that market has grown, particularly the Indian stock market, Nifty 50 and also USA, you can say they both move in tandem. Nowadays I have seen like as if India is the representative of USA or USA is representative of India, I don't know. But this is how they move in tandem. So it is going in such a crazy way that sometimes we all start thinking that this is great Indian this economy or it is some kind of a bubble, liquidity driven. So let me just put it in nutshell in sector wise. So first of all, if you take suppose IT and technology sector. So you will be surprised that world over and particularly in India also so many of job losses have happened, and in India they continually they keep on even though they don't announce it, they manage media, particularly all these newspapers and TV channels. Nobody reports about the dire situation of the technology people where people are losing jobs. Nobody reports. All kinds of reports are being suppressed. But this is in dire situation. Then how they keep on these stocks are keep on going up when the results are also not so great actually. So that is one of the reasons I don't understand. This is all driven by the hype story. Then the second, if you take banking, yes, it was doing great because of too much credit growth, loan growth. But at the same time, as I had told many times before, 1 year before, that a time will come when banking will start facing crunch because there won't be enough money to lend. Means that deposit won't be enough. And now they have to increase the deposit rates. That's why your margins of banking also will keep on squeezing. So now onwards, so you will see that banking also will not be contributing much in the future. It cannot right now. Then the oil, gas and petrochemical basically. So as we have seen that it is remaining in the same range and there is not much fundamental reason despite of the war going on in Israel, Gaza and this Middle East and Russia, Ukraine also. But things have, at least as far as the demand situation is there, that China is continuing to struggle with the demand. So there is not much demand coming into this, and there are already other supplies from the South America also countries, Venezuela. So all this supply is coming so that we won't see any major changes in the pricing in oil and gas, and particularly the prices will remain subdued in petrochemicals also. So why should Reliance, which is the biggest as far as the weightage in Nifty is concerned, it should rise? But it still keeps on also rising because again it is kind of a media management where I don't see any fundamental reason for Reliance to actually do anything well. Then comes to the metals. Metals is also a big sector. In fact, if you will see the prices of say iron ore, steel or zinc or lead in last say 2 or 3 months, it is on an average down by around 10 to 15%. There is nothing change and fundamental change happened in China, as we had come out in the video which we had told about that. Metals is all about China story because 50% of the world's metal production and consumption is by China. So China continues to be in bad shape economically, not much demand incremental is coming. Then how come these sectors are in India, you see these metal stocks are rising? This is another bubble. This is some kind of that, what do you call that, some kind of a nifty or index management is happening. Then you come to FMCG. FMCG is in actually trouble because it's all about real consumption, rural consumption story. And in India, agriculture, if you look at the latest statistic also, the agriculture is down by 0.8% in this quarter, say up to January. And so rural income, and with the inflation actually is, food inflation is impacting more to the rural population, where the where the percentage of your consumption or the spending on food is higher as compared to the urban population. So how, when that that inflation is still high enough for the rural consumption, and that demand is slowing in rural consumption, and how this FMCG stocks will contribute to the Nifty? It will not. So that is also not the reason for that. Then capital goods. Capital goods is when it will come. It is only in India. If you look at the latest, whatever the data has come, statistics of growth and GDP and sector-wise, you will see that it is all by the government spending. Means it is not the private investment. It is all the public investment. Means government investment in infrastructure, which is pushing public capex, what is called, which is pushing this. The so-called growth story of India. There is no consumption story. There is no private investment. Means private companies are not putting up capexes to that extent. It is still, everything is driven by government. There is a limit also to which government can continue without stretching their finances, without stretching the fiscal deficit, and without stretching the rupee devaluation. So if you look at the overall, then you will see that this is more of a dumb money, I would call. I would not call. What is dumb money and smart money? Smart money is by the professional fund managers. So institutional money, if coming into the market, so there it is called smart money. And dumb money is by the basically retail investors putting money. So this is more of so much of euphoria about India's growth, that people, more and more retail participation is happening, and they are putting money, and that is what the domestic dumb money, what you will get, the retail money, is driving up this euphoria without understanding the fundamentals and the valuation, because everything is about valuation also. One should understand that this cannot keep on stretching. There will be a time. So this is more of a analysis as far as that where you feel that this is fuel, this rally has been fueled by some fundamentals, or it is a euphoric dumb money driven, liquidity driven rally. And liquidity also not smart money but dumb money, mostly the retail. That is the story, that retail always tries to come when the market has gone to the peak. That is the time you will see more and more retail participation, more such dumb money coming. So this is what in nutshell, I would not be putting money, because if you look at some of the statistics, you try to look into the sticks, you will see that most of the smart money is getting into, in last 2 months, more and more into gold. You see the gold rally, or it is getting into the cash liquidity, or in bonds, not in the stock market. Stock market, not much money, smart money is coming. It is mostly the retail dumb money is coming. So that is also all, just I wanted to share my thoughts with you, that don't be in euphoric, be smart, like smart fund managers, and take out your money from the market as of now. That's it from my side. Ciao from 𝐦𝐚𝐫𝐤𝐤 from Moscow. Love you all.